Roger, great to have you with us.
Hey, how are you?
It sounds like you think the market's just not sort of getting Palantir, since Palantir is actually exhibiting growth compared to some of its peers, which are completely unprofitable. What exactly aren't they getting? And maybe it's just the market environment. The market environment is not a good one for stocks of this ilk.
Well, yeah, I mean, absolutely. It's an extremely tough tape right now. I mean, the market does not like uncertainty, and you have three very key things that are extremely uncertain. You have the geopolitical situation right now that's extremely uncertain. You have inflation. To what degree will it stay, or will it eventually taper off? And then lastly, you have interest rates and how aggressive the Fed will be. As long as you have those unknowns, I think you're going to have gyrations that you see that we've been seeing over the past 6 weeks. As the market sort of searches and tries to find its footing. I don't think it's anything uncommon. If you've been invested in the market for the last 20 years, we've seen this time and time again. I think to shift gears to Palantir, when you look at the Q4 in and of itself, I mean, they beat on all key metrics. They beat on revenue. They beat on adjusted operating income and also adjusted free cash flow. I think that what the market seems to be missing are the key takeaways from the call. I think one of which got literally zero play today, was CARP coming out and mentioning a substantial reduction in the stock-based compensation in 2022. If they cut it to the degree that he mentioned it to on the call today, I mean, this should result in the company becoming profitable on a GAAP basis. And then secondly, I would say that when you look at Palantir as a whole, it's important to remember that they're only one of a handful of companies growing at 30% and generating free cash flow margins of close to 30%. You'd be hard pressed to find other companies out there with the same type of numbers as Palantir. So, again, to your initial point about growth stocks, look, during corrections, stocks will come down. It's just a force of nature. But it's important to remember that good quality stocks will come back. If you're a company out there that's trading at 100 times sales with no visibility and no profitability, you know what? You won't come back. But we don't think Palantir is one of those companies. We think that's a key differentiator here in this situation.
They did beat on a lot of metrics, but they did miss on adjusted EPS. So let's be clear. There's a reason for investors to be upset in terms of them meeting estimates here. Roger, I'm curious because you've been a long-time investor. When we say long-time investor, it predates its IPO. You've been an investor since 2014. And so I'm wondering how being an investor for such a long time influences how you see the company right now. In other words, was your cost basis so low that you're willing to stick with it? I'm just trying to get your perspective.
Yeah, I mean, I think that's part of it. I think when we invest, we look at two key things. We look at, the ability of the company to innovate and then management's ability to execute. And we think that since the company has come public, although they've been in business for 17 years, their ability to innovate and management's ability to execute is just unparalleled in the market. I mean, I think that we are in the infancy stages of what this company can literally do. I mean, we ask ourselves the question that, are corporations and governments around the world going forward going to need less big data analytics software or more to solve tough problems? And we're in the camp that they're going to need Palantir software, and we think it's a game changer going forward. So yes, is my cost basis super low? Absolutely. Did I sell any shares personally since the company has come public and since I've invested? No, I haven't sold one share personally. So I'm fully committed to the story and what the company is doing.